Hello Slopers, Brian Johnson here again with thestockminer.com to do another video for you. First, I've got like 3 parts to this I want to show you guys. Hopefully I can get through it in 10 minutes, but I think I can. Pull out my Dale Carnegie skills and see if I can't make this happen. This chart, this was like the first chart I showed you when I did my first video for slope. And it showed how we were holding very nicely to this upper trend line or upper channel line. Oh, look where we're at. Right back to the upper channel line again. So some of you asked me where defensible places to enter and exit are. Well, guess what? This would be one of them. If I'm looking at this from a chartist standpoint, I love that I've seen this hit here, hit here, hit here, hit here, and it's held every time. So no reason to think that we can't hold this area again. It is very bullish to get all the way back up here again, but due to the past, that's what all of these did. Look at these major run up, major run up, major run up. And then it goes sideways to up ever so slightly and starts to fall. Sideways to up, fall, sideways to up, fall. Why not this time? So this is a very defensible place to get short. If you're looking for targets to get out, of course you want to be looking at the 20, maybe this lower channel line here, this lower channel line here, just based on where we've gone in the past. See, this time we hit here, hit here. The next time we went just a little bit lower and hit here and hit here. So no reason to think that if we start to fall from here, we can't see these lower channel lines again based on previous performance here. So overall, wanted to bring this to your attention again, show you that we're right back up to this upper channel line again, and hopefully you guys will be watching this going forward. So I think, there's no reason to think that we can't see another little tumble here, but it might take a couple days. It's going to wear on your patience if you're bearish. It's going to wear on your patience. So, like Mr. Miyagi said, patience, Daniel-san. So make sure you just give it some time here. This might go sideways up a little bit and kind of work its way up here, but ultimately it's going to end up like these then, if it does that, and it's going to fall back to earth. So be watching for that. I think this is a really good critical juncture for the bears if you're bearish on it. The other thing I want to show you, if you guys have Thinkorswim software, one of the tools that I love to use in there is called the Fibonacci raise. Because I use my SPX a lot, there is just junk all over my my chart on Thinkorswim. So I'm going to show you what the Fibonacci rays look like within my stock charts here. So let me pause and bring that up for you. Okay, so once again, here we go. You can see the SPX, and if we start from back here and start drawing trend lines, notice how it makes a very pretty ray pattern here. And we are, once again, right back up to the top of that ray pattern. As you can see, if we look at it from over top, the momentum is starting to also roll over here. This is giving us kind of that rounded top action. So unless the bulls can really get back up here, maybe 1125, I've heard that number thrown out a lot. That'd be very possible. I don't think that's out of the realm of possibility, and it certainly doesn't break anything from this formation or from this pattern that we're watching. Break way up into here, 1150 changes everything, then it's all off the table. But for right now, like the way these rays are holding, and they've been very good support resistance in the past. No reason to think they won't continue to be that way in the future. And we are dangling right up there again on the SPX. Okay, so while I'm going to show you this, even if I zoom it in a little bit, some of you might not be able to see that quite as cleanly. So I'll show you. Here are those rays, and you can see we're right back up to it on resistance. Pretty stretched at this point too. So watch for a fall or maybe a move up to sideways, and then a fall. That could come next week because it is options expiration week. Expect a lot of volatility next week. All right, so what else is there to show you, Whale? I'm glad you asked. Let me pull up one more thing. Okay, for the last part, I want to go into this. Here's an S&P daily chart, and all I did was draw one little line in here, as you can see. And for this exercise, you guys need to kind of understand a little bit about the SPX. And the SPX has obviously 500 stocks in it, but each one of those 500 stocks in the SPX, as we're looking at here, is weighted a little bit differently. Weighted, hence the title of my post. Wait, ha ha ha. Okay, so they're all weighted a little bit differently, meaning that ExxonMobil gets more pull in how the market moves than Joe's Caddyshack down at the bottom. So that makes a difference. If ExxonMobil moves X amount of percent, it has a little bit more weight given to it than do some of the smaller stocks in the S&P. And that, of course, creates what you see in front of you. Okay, so if we look at this, let's just look at this. We have a little swing high here, a little swing high here. So at the top of this swing high, I'm going to go ahead and put my little line in right at the very top of it. And as we move up, we come back down and we reach 1019.95. Comes below this little support resistance area. Comes back up, makes the high at 1101, comes back down, hits 1029, which is right on this line, this support resistance line, then continues up, and now today we actually broke to new highs. So it doesn't have it tagged over here, but we hit 1105 today, 1105.37, which is higher than where we are here. Okay, so these are, of course, the weighted index. Everything's weighted a little bit differently. Now, what if we had stock socialism? And everything was weighted the exact same way. There was no difference between ExxonMobil and Joe's Caddyshack. They were all looked upon as equals. And everything was weighted the exact same way. And then we drew a chart. Would that make a difference? Well, I don't know. If you guys are not aware, there is an index that does that. Obviously called the SPX equal weighted. Wow, unique. So let's take a look at that chart and see if that has any kind of a different look to it than what we're seeing here on the regular SPX. And lo and behold, here at the top of this move, swing high, put a little mark above here, straight across. Now look, we bust through, come down, 1443, hit the line, come up, come down, 1442, interesting, and right on the line, close right on the line. Continue up from there, but we don't make new highs. This has not broke the 1572 area yet. The high of it was 1561. It's a good 11, 12 points below the highs. So you put everything on equal footing, that makes the chart look a little bit different than what we were seeing back here. Move up, break down, low, break up, break down, a little bit higher than where we were back here. A move up to new highs. Not the same if you get everything equal footing. So interesting charts to look at. Certainly something you all should be at least paying attention to. Now, what does this make a difference? Will it make a difference? Who knows? Really don't know. But what I am saying is that based on the three things we looked at, I would have to say that if the bulls are getting really confident and getting very proud, I think that's good for the bears at this point, because based on a little different look at technical analysis, I'm thinking to myself, I'm probably not looking to get long here. Probably looking to get short at this point and make the bulls prove it to me. Here we still have a head and shoulders intact on an equally weighted basis. The rays I showed you before coming through show we're right back up to resistance on the SPX. And the Dow chart clearly shows we're back to that top channel line, which has held very well in the past. So, being how it's a probability business, I would have to say the probabilities at this point are still stacked in the bears' favor for a pullback maybe of some sort. I'm not saying we break to 600 from here, just saying that the probabilities are better to the bear side than obviously they are to the bull side. So I hope you guys found this of interest. Let me know if you have any questions, and I'll talk to you guys again soon. Bye.